All right, hi everyone. Welcome to today's webinar uh, for live analysis session by IC Markets. Right. Hope all of you have had a great weekend. Okay, so since today is a live analysis session, do drop all your requests in the live chat box under the video. Yep. With any, if you have any questions or you would like to see analysis on any commodity or forex pair, do drop your requests in the chat box below, and I'll be more than happy to go through the analysis with you. All right. Let's just wait a minute or two before we start. We're a little bit early today. Right. I guess we'll see. Like last week, we had three major central banks, right, announcing their interest rate decisions, starting off with the Fed, followed by the ECB, and then the Bank of Japan. And this week we have another two central banks taking the center stage as well. We've got Bank of England. Oh no, sorry, we have Swiss National Bank first, followed by the Bank of England. So before we start today's session, we'll just take a quick look at the key economic events that are lined up this week. All right. Before we start, I just want to make sure you guys can hear me loud and clear. You can see my screen as well. It should be showing IC Markets Webinar Live Analysis Session 19th of June. Right? If uh, if that's all clear, and we'll just start off with a disclaimer as usual. All right. So any information in this video does not contain and should not be construed as containing investment advice or an investment advice recommendation or an offer or solicitation of the transactions in the financial instruments. Right. All information is presented as educational material only. Right. And also do take note of the risk warning that comes with CFDs. They are complex instruments and come with a high risk of losing money rapidly due to leverage. Right. You should consider whether you understand how CFDs work and whether you can afford to take the high risk of losing your money. All right. Okay. Thank you, Val, for the thumbs up. So, okay. So I guess everyone can hear me loud and clear. Right. All right. So, my name is Ketan Ramachandra. So I'm an investment analyst here at Everest Fortune Group. So, together with IC Markets, we have a special partnership to bring you this webinar series. When today's session will be live analysis session. So, here at Everest Fortune Group, we have been the finalists for Best FX and Equity Research for 2019, 2020, and 2021. Okay, so just a very simple agenda. We'll start off by looking at the key economic events this week. So we've had, like I said, two central banks coming up. Plus, we also have inflation data out of the UK, and we have the Fed chairman Jerome Powell having his two-day testimony on the 21st and 22nd of June as well, which is likely to be market moving for the US dollar and also for gold as well. All right, so now let's switch over to. All right, hi Jack, good to see you. All right, let's switch over to Forex Factory. Right. Okay. So here I'm on GMT time here. So I've got the calendar from 19th of June to 24th of June. I've highlighted just the two most high impact events because we don't want to see everything else because that's just too much clutter and also just noise as well. We want to see major economic events that could impact the markets drastically. Okay, so Monday is a quiet day. All right, so just a quick note, today is Juneteenth as well. It's a holiday in the US. uh, Equity markets will be closed, but futures markets will be open. But I think they believe just for half day trading. Similarly for uh, crude oil futures as well as soft commodities and metal commodities as well. I think they'll all be trading, but just for the first half of the US trading session. Otherwise, equity indices are closed and they will reopen on Tuesday. Okay, so right on Wednesday, 6 a.m. GMT, we have UK inflation data. This will be pretty important because although headline inflation data has been falling rapidly, the core reading has not, which is very it's a phenomena that we see across all the major economies, right? So we see, oops, sorry, I don't have it here, but okay, but do take note that the core reading for UK inflation actually increased last month, and if we have a further increase in the latest data, it's quite likely we may see the pound seeing strong demand for for sterling pound again. And then on Wednesday, 21st, 2 p.m. GMT, we have Chairman Powell starting with his first day of testimony. And then the following day, 22nd June, we have him continuing as well. But prior to that, we have the Swiss National Bank announcing their monetary policy rate, so their official bank rate as well, policy rate. So it currently stands at 1.5%. They are likely to raise it to by 25 basis points to 1.75. Similarly, for the Bank of England, their official cash rate or bank rate stands at 4.5%, and markets are also expecting another 25 basis points increase as well. All right, so let's just look at. Oh, no sound. All right. Oh, hang on. All right, let me see. Check, check, test. Can you guys hear me now? Right, can you guys hear me now? Oh, okay, great. Thanks, Val. Okay, okay, sure. Okay, maybe is this better? Okay, I can bring. Yeah. Okay, I suppose this is better now. All right, thanks, Ranga. Thanks, Val. All right. Okay, sorry. Okay, just bring the mic a little bit closer. All right. Okay, let's just dive into trading view and look at the dollar index. Okay, let's just start off with the daily chart first, slightly higher time frame to identify the major support and resistance levels. Okay, so this is the dollar index, and I'm on the daily time frame. So as you can see, the last almost 2 weeks, we've seen the US dollar selling off pretty strongly, and hence we see dollar index dropping, right? A combination of fundamental data as well, pushing the dollar index down. And on Friday and today, we're seeing some slight demand for the dollar as well. This is most likely like a corrective move, right? As we saw last week as well on the 8th of June, after stronger than expected unemployment claims pushed the dollar down. We had 2 days, roughly 2 days of retracement to the upside before prices, the dollar index continued to fall. So similarly, on 15th of June, we had higher than expected unemployment claims, which is negative for the US dollar. Hence, we saw a big sell-off last week. And today, again, we are seeing some retracement moves to the upside. So for at least for today and tomorrow, I think we expect the dollar index to perhaps rise, and then we may see it push back, we may see it resume its downtrend again. So to the upside, right? We are the first resistance, we see it as at 103.43. First support, we have a zone between 100.80 and 101.30. Second support is down below at 99.50, and if I just zoom out a little bit, you can see that the first support lines up with the Fibonacci projection, as well as this overlap here that was formed in the middle of March. And then with regards to the second resistance, we can see a nice overlap level here as well at 105.65. We can see multiple instances where price has reacted off this level as a support, and then as resistance back in early Jan and early March as well. All right, hi Jamilu, good to see you again. Welcome to the session. All right, okay, so for those who are just joining us, we are on the daily chart on the dollar index. Try to establish the resistance and support levels. Okay, now and we can also see that we have this descending trend line here as well. So we can see there's at least 5 touches, more than 4 to 5 touches here. And we can see that this trend line is still being respected. Price has reacted off it uh, and started to head lower as well. So we can see a descending triangle shape as well for the dollar index. Okay, let's zoom in onto the 4-hour chart and see if you can identify levels that are closer for us to determine, right? what we have identified earlier was resistance and support levels on the daily chart. But let's just zoom in onto the 4-hour chart and we can see or identify levels that are closer. All right. Okay. So the first resistance isn't too far away from the current price, but we can also do a Fibonacci retracement here on this leg of the move. So we can see here we can take this swing high on 5th of June, and then we'll go to the swing low last week, and we'll pull up all the fibs. Right, okay, so we can see that the first resistance does line up with the 61.8 Fibonacci retracement, so that's good. We've got two indicators signaling to us that this is a key overlap level or resistance level. And we can also see 50%, 38. Okay, we don't really see any nice overlaps. What looks like a good overlap is here in just above the 23.6% Fibonacci retracement. So I think we can label this as a closer as an intermediate resistance level. Okay, so you can see here I'm going to take this candle on the 10th of April. Right, I'm going to switch this to a dotted line. All right, so this is my intermediate resistance. Why have I selected this as an intermediate resistance level? Because we can see on the 10th of April and as well as on 12th of May, this level at 102.67 has acted as a significant resistance for the dollar index. And then just recently, last week on 14th of June, it actually acted as a pretty strong support. Right, so we can see price bouncing off this level here to move higher before eventually breaking through it. So we have three instances where price has reacted off this level. The first two were resistance, this level acting as a resistance, and then most recently last week, this level at 102.67 acted as a support. So this is uh, signaling to me that it's a very key important level. So we shall indicate this as a resistance level or intermediate resistance on the 4-hour chart. So I think you can see now the dollar index is rising. It's retracing higher. It's currently trading at about 102.45. And if it does come up to this level at 102.65 to 102.70, this is where I think we should expect to see some resistance coming into play. Okay, now let's look for a support level that may be a little closer. So once again, let's try and look via identifying overlap supports. But first of all, I'll just like to clean up the Fibonacci retracement here. So as we can see, the other levels don't really line up well with any of the other overlaps. So I think just for now, I'll just keep 61.8% and the rest we can just remove it for now or for today's analysis. Okay, so I'll just keep 61.8. Oops, where did it go? Wait, hang on. Yeah, sorry. Okay, here we go. Now, what about for uh that support level that's closer? Can we find any overlapping levels as well? So this level here at the recent swing low at about 102.10, 102.10 does look like a decent overlap as well. Right, it's not the best overlap, but it is pretty good. Okay, so I'm going to highlight this as a green support line as well. Okay, so as you can see here, back in 23rd of March, this level at 102.05 acted as a strong support on 23rd of March, 30th of March, and again on 3rd of April as well before finally breaking through it. And you can see here on another two instances, 10th of April and 11th of April, where for a couple of days it found support again before breaking lower. And then from mid-April onwards till start of May, this level or zone acted as a pretty strong resistance area as well. You can clearly see the dollar index being capped below 102.20. Of course, on this 2 days, 2nd of May, it did poke its nose through this zone, but it did pull back again. So we can see that this level has acted as a significant support and resistance in the past, and just recently on Thursday it acted as a significant support area as well. So we can see now. So now we've on the 4-hour chart, we have identified uh, a support level and resistance level closer to the current price action, right? So this support levels or this horizontal overlap levels were identified not using Fibonacci retracements or any other indicators, but it was identified by looking out for uh, overlap levels where price action has reacted off it significantly multiple times. Okay, so for uh, today, and yes, as I mentioned at the start, for today and probably even tomorrow, we may see the dollar index push higher because after every big strong move down, we have seen some retracement to the upside. And if the fundamentals are again in favor of a US dollar sell off, we may see the dollar index start to lose steam at about 102.67 around here before reversing to drop lower. Okay, now what could cause it to drop lower as well? One would be the first uh, piece of data would probably be the pound inflation data as well coming out of the UK, and also we have Australia's central bank, the Reserve Bank of Australia (RBA), releasing its monetary policy meeting minutes as well. So if the meeting minutes highlight a very hawkish tone from the RBA, and if we have UK inflation coming in hotter than expected, especially the core reading, which actually increased the previous month, then these two fundamental factors are likely to see these currencies gain versus the dollar pretty significantly, right? So that is where we may also see the dollar index itself start to run out of steam around maybe 102.70 and start to retrace lower. Okay, since we have big key information data coming out of the UK with regards to their inflation and uh, bank rate statement, monetary policy statement. So let's just go to the pound, right? Sterling pound, and start off the analysis here. So once again, we'll switch to the daily time frame and see where the current levels for support and resistance. Okay, so these two resistance levels were identified. All right, hi Besta, no worries. Thanks for tuning in. All right, okay, just to get you up to speed, so we are on the pound now, on the daily chart for the pound. Right, okay, so we're now identifying the levels on the daily chart, and then we'll switch to the 4-hour time frame and try and identify potential levels that may be closer to the current price action. All right, so as you can see, this basically pound is hitting close to a 52-week high. Yes, it's already hit a 52-week high. So last year, back at the end of April, pound crashed through the level of 1.28, right? 1.28 is here, and we have just breached this level of the last couple of days, right? So pound dollar has hit a 52-week high, and if inflation data out of the UK comes in hotter than expected, and we see the Bank of England being aggressive as well, or being very hawkish in their policy statement as well, it's very likely we could see the pound push higher uh, towards 1.29 uh, over the next couple of days. All right, so this is how we've identified the intermediate resistance and first resistance levels on a daily chart by using a Fibonacci projection here. So we've done the Fibonacci projection, which involves 3 points. So we've taken this swing low here on the 7th of March, going to this swing high on the 5th of May, and finally taking the last point, which is the swing low on 26th of May. And then from there, we have the 78.6% and 100% projection levels. And not only do we have the projection levels, they also line up well with regards to an overlap area as well. So you can see this level at 1.2966 has acted as a pretty decent support area for sterling pound back in March of last year. And then also the level of 1.3186 acted as a strong support in the end of December 2021 before price broke through it in March of 2022, and then it acted as a pretty decent area of resistance. Not exactly perfect because you could see price going as high as 1.3290, breaking out of that resistance level before finally reversing to head lower. Right, so this is how we've identified the resistance levels on the daily time frame. Right, okay, now let's, and okay, of course, we have the first support. We have a very strong overlap here where you can see price was rejected at 1.2669 back in 4th of May and again on 30th of May and more recently on 5th of May this year as well. Right, so you can see, and if you zoom out all the way, it goes all the way back to April 2020. So you can see that this was previously a key resistance level and area which finally broke through, and now naturally this will act as the support area, the first key support area for sterling pound on the daily chart. And the second support comes in over this next over this 3 days in early June. And you can also see we have an ascending trend line here highlighted by the green dotted line that shows price trend bouncing off this level 3 times to go higher. So this is the view, uh, the support levels and trend lines that we have on the daily chart. Okay, let's quickly going into the 4-hour time frame and try and identify levels that may be a little bit closer. Okay, so if I zoom out, okay, like as I mentioned, this was a 52-week high, 1.28 was a 52-week high, so we're not going to see anything recently here. So as a first on the 4-hour chart, we can also probably look at this level here and at 1.2848 and identify it as a immediate resistance area or level, sorry. Okay, and we can also do a Fibonacci retracement on this leg of the move from this swing low on 5th June to this swing high last week. We'll pull up all the fibs. Right. Okay, so let's see if we can find any key support areas as well. So, or something that's closer. Right. We just zoom in a bit. Sound is only on the left channel. Okay. Thanks for the feedback, Mark. We'll look into this and see what's if this is something that's on our end that's causing it. All right. Sorry for this. Apologies for this. Let's see. Let me take a quick look at settings. No, it looks pretty okay on my end, but all right. Thank you for the feedback. I'll just take note of this. All right. Okay, so on the 4-hour chart, okay, as you can see, the next support zone for the pound is between 1.2670 and 1.2720. That's quite a fair bit off where price currently is. But we do see the 23.6% Fibonacci retracement level here at 1.2735. I think if you want to, we can put probably for me, oh wait, let me see if there's any other, can I do any other retracement or projections? No. Okay. For me, okay, so for me, and this, when I look at this level here, you can see some sort of support as well. Okay, so if you are looking for something that's a little bit closer, after making this surge high on 15th of June, price consolidated around this level before breaking out of 127.85 to move higher. So I think something that's on a closer note, closer level would be this 1.2785 to identify as a support level that's a bit closer to current um, price action. And on to the upside, we can see that 1.2850 would be uh, the other resistance level based on the recent swing high. Okay, so as we've mentioned, the dollar index has started uh, today in demand, right? Dollar, we've seen some relatively strong demand for the US dollar, which is pushing dollar index up. So naturally, we expect sterling pound to pull back, the euro to pull back as well. So I think if uh, sterling pound can find support around this level at 1.2785, and if we see inflation data on Wednesday coming out to be much more stronger than forecast, that means the Bank of England is very likely to remain aggressive or hawkish on Thursday, 22nd of June. So that could push the pound higher after bouncing off 1.2785. But also do take note that uh, towards the later part of the day on Wednesday, 21st of June, Federal Reserve Chairman Jerome Powell starts his first day of his testimony. And again, this is another market moving event. It starts at 2 p.m. GMT. So when he takes the stage, his words and remarks are going to be watched very closely, and they could actually reverse all of the initial moves that we may see in the pound and any other currencies. So do take note of this event as well, because his remarks will definitely be market moving, and if he's hawkish, despite the Fed keeping rates steady last week, we could see the dollar continuing to move higher, which would naturally, of course, push sterling pound lower and perhaps maybe even come down as low as 1.2720 towards the first support zone. Okay, right, and then yes, okay. So now let's just go switch to the euro, and then we can probably look at gold as well, right? All right. Okay, hi, Mrs. Ali, welcome today's session as well. Okay, so same thing. Let's quickly go on to the daily chart, establish the levels on a slightly higher time frame, and then zoom in. Right? Yes, Bester, we'll get to gold as well for sure. Gold, we'll cover gold, and we'll look at oil as well. Okay, so similarly to the pound, we are seeing demand for the dollar come in on Friday and today as well. So the euro has run into this resistance level here at 1.0947. Okay, why is this a resistance level? Because we can see back in 4th of April, it acted as a significant resistance, then finding decent support uh, during 20th of April onwards before finally breaking through. And then just recently last week, it ran into serious resistance again. So we have multiple instances where price has reacted off this level, and we can see it pulling back quite sharply today. Okay, yes, of course, we can definitely look at dollar yen as well. Okay, so after euro, we'll go to dollar yen, and then we'll go on to gold. Okay, so we've done, so we have this Fibonacci retracement here. Okay, so there's a few things going on. We have a Fibonacci retracement on this leg of the move, from going from this swing low on 15th of March to the swing high on 2nd of May. So we have identified this level, the 76%, because it's broken all the other levels, right? So we have the Fibonacci retracement level at 78.6%, acting as a decent support area, and price did bounce off this region or this zone on 2nd of June, right? So it did act as a pretty significant support area where price consolidated above it for a couple of days, pushed higher before pulling back, and then finally moving higher over the last week or so. All right, and then we have what is here? We have, okay, we have the Fibonacci projection level as well. So we can see that it has bounced off, and there's a confluence. We have a confluence area to indicate that this is a strong support zone. We have the confluence of the Fibonacci projection combined with the Fibonacci retracement level at 78.6%. So this indicates to us that this is a pretty uh, significant zone or support zone. Right. So I will also would like to just highlight this area. Right. So this is a key support zone for the euro on the daily chart. All right. Okay, now let's zoom in onto the 4-hour time frame. All right. Okay. So naturally, I think it's quite uh, obvious. One of the first things you can do is do a Fibonacci retracement here as well. So I would use this swing low on 6th of June to this swing high on 16th. Okay, the reason I'm not using this swing low is because the trend line, as you can see, doesn't really capture. Okay, let's see on a daily time frame. How does it look on a daily time frame? Okay, I guess you could say it captures the price structure quite well. It does capture it quite well, but because you can see on this downward move, the trend line has captured the price structure very well, very cleanly, right? You don't see any significant deviation of the candles price action of the candles away from the trend line. Where here you see quite strong deviation here to the upside and down here as well. So I think because of that, I would prefer to use this swing low as my starting point and use this swing high as the end point. Okay, so you can see here the trend line does capture the price structure of this move pretty well. No, it's not ideal, but it's good enough. Okay, so let's pull up all the Fibonacci retracement levels. All right, morning Amar. Welcome to the session to today's session as well. Okay, right. Okay, so what we had initially identified were resistance and support levels on the daily time frame. Now let's look for uh, support areas closer to today's price action. So naturally, the first resistance will remain the same on the 4-hour chart. You can see price clearly reacting off this level, running out of steam at 1.0945 or 1.0960 and 70, running out of steam here and then pulling back sharply. We can see that there's an overlap as well. So if I were to use this low here, so this swing low on 17th April bounced off the level at 1.0910 to go higher, and then it acted as support again on the 11th of May, and then on the 16th of May it acted as a resistance as well because price was retracing up close to this level before resuming the downtrend. So you can see multiple instances where price has reacted off this level, and it also sits slightly above the 23.6% Fibonacci retracement as well. Okay, so this would be the first support area for the euro, but demand for dollar looks pretty strong today. So it's quite likely we may see this level price push through this overlap, and it may find support at 1.0899. So I'm going to highlight this as a zone for today. Right, this is our immediate support zone for today. And if the dollar strength continues and this level breaks, then the next support would be around 1.0847. Now this is a good level because it's a combination of alignment between the Fibonacci retracement level at 38.2% and the overlap as well. Right, so if I zoom out a little bit, I'm going to label this as the next support area. Okay, so let me just zoom in a bit. Right, okay, so the next support area should 1.08 or 1.0900 be broken. The next significant support area would be at 1.0847, where we can see a very strong overlap where the price acted as support back in 10th of April, on 14th of May, before finally acting as resistance on 18th of May as well. So multiple instances where price has bounced off this level, and it also lines up quite close to the 38.2% Fibonacci retracement as well. So this would be the next major support area for the euro should the first support zone not hold, right? We see strong demand for the dollar index. Yet we can see now, yeah, dollar index racing higher in the last 4 hours. Let's see, let's go on to 1 hour. Yeah, so it just happened in the last hour, right? In the last hour, we've seen strong demand for the US dollar pushing dollar index higher, and naturally all the other pairs are dropping as well. Okay, so these are the levels for the euro on the 4 hour chart. Okay, now let's jump into dollar yen. So similarly, we'll look at daily chart. So we had the Bank of Japan uh, announcing their interest rate decision last Friday. No surprise there. They held rates steady at negative 0.1%. They still continue to be the most dovish central bank in the world despite global inflation. So as you can see, as you can expect with monetary policy divergence, where you have majority of central banks raising rates or keeping rates elevated, and you have the Bank of Japan keeping rates at a negative level. So you have this divergence in monetary policy, which is keep putting a lot of pressure on the yen. So hence, over the last couple of weeks, we've seen dollar yen uh, gain strongly, rise strongly. We've also seen Aussie yen, pound yen all rise strongly versus the yen. Okay, so right. So these are the support and resistance levels on the daily time frame. Okay, so we have this Fibonacci retracement here on this big downward pullback. So 61.8% Fibonacci lines up with the first resistance. So this is a pretty significant resistance area. And then if we zoom in a little bit in terms of support, we have two Fibonacci retracements here. So what we have is a confluence of Fibonacci levels. So when we take this longer move from this swing low on 27th of March to the swing high last week, we have a Fibonacci retracement at 23.6%, which lines up well with this overlap area. And we also have, when we do the Fibonacci retracement on this swing low on 9th of May till the recent high, we also have the 38.2% line up as well. So we have a confluence of Fibonacci retracement levels together with an overlap level as well. So three factors to identify a key support zone for dollar yen. Okay, and also do take note of this ascending trend line as well. We can see price has bounced off it about 3 times since the end of March, and it is price dollar yen continues to push higher. All right, so now let's go into the 4 hour time frame. Okay, so let's see if we can find something more close, levels that are more closer. Okay, so I see we can probably do Fibonacci projection here as well on this part of the move. Right, can we do, oh no, we can actually do wait, hang on, sorry, yeah, first would be, if I were to do a projection, it would probably be from this swing low to this swing high. Let's see if we can find any one. Okay, projection. Okay, so if we want something a little bit closer based on Fibonacci retracement projection, we can see that this level at 61.8% would serve as a pretty decent level, as a closer support area. As you can see, price, let me just zoom in a little bit. Price reacting of this level, running into resistance on 15th of June, pulling back, breaking through the resistance, And then just recently today, as price pulled back, it found support above this level as well. So we have not the best overlap, but you get the idea. Pretty decent overlap level that lines up quite close to the 61.8% Fibonacci retracement as well. Okay, and then let's see if I can look for Fibonacci extension. Okay, it's going to. Okay, so we have. Is this a good area? Let me see. We have this. Oh, okay, wait. Maybe. Hang on. Let me get rid of this. I think this projection. Will I get anything good from here? Let me see. Okay, I think, yeah. So what I'm doing is I'm doing a Fibonacci projection on this leg of the move, on this uptrend here, from this swing low on 11th May to the swing high on 29th of May, and then to the swing low on 1st of June. Okay, the reason I'm doing this Fibonacci retracement is a projection is to identify the next resistance area. Okay, although on the daily chart we have identified the second resistance at 145 basically, that's too far for uh, analysis on the 4-hour chart. So that's why I've done this Fibonacci projection to identify a resistance level that's a bit closer to the current price action. And let's just zoom out to see if we have any overlaps, but no, not really. Don't see anything clearly over there. So in terms of the next immediate resistance level for dollar yen, it would be so should this first resistance at 142.12 be broken, then the next resistance area would come in at the Fibonacci projection level at 142.83. Okay, so this is the uh, resistance levels that are closer based on current price action for the 4-hour time frame. And in terms of a much closer immediate support area, this we could consider this as an intermediate support area. We see a pretty decent overlap here. So 141.45 would be the next immediate resistance support. And if you want something a bit closer, should price break through this level, another good overlap, because this support zone here, this first support zone between 137.66 to 138.95 is too far for daily analysis, right? If you're doing a daily intraday analysis on the price action for this for dollar yen, this is simply too far. So that is why we have identified this as the first immediate intermediate the first closest intermediate support level. The next one would probably be around here, because why would I choose this? Because all right, let me just switch this to green. Where is it? Green support dotted, sorry. Okay, so here, because we can see price running into resistance on 25th of May. Of course, it broke through, found support here on 29th of May, went lower, then it found resistance three times: 5th of June, 7th of June, and 13th of June, before finally breaking higher. And then just recently, last week, it found support around this area as well before bouncing higher. So you can see that this level at 140.23 has acted as a significant resistance and support level since 25th of May. So for support levels that are closer to the current price action, do take note. The second support level would be at 140.23. The closest intermediate support would be at 141.45. No change to the first resistance, which is at 142.11. And of course, the next resistance, should this level at 142 be broken, would be up at 142.84 based on the Fibonacci projection here. All right. Okay, let's switch to gold now, and then we'll probably end up with crude oil or WTI oil if there's no other requests. Right. Okay, so let's switch to gold. Okay, right. Okay, so once again, this is the daily chart. So we can see the first resistance and the first intermediate resistance at first resistance at 2050, intermediate resistance at 1978, support at first support at 1950, which is currently being tested as dollar index is rising. Second support at 1888. So these are the levels for the daily time frame. Now, of course, let's switch on to uh, the 4 hour time frame. And then, okay, yeah, we'll look at dollar franc as well. Sure, just Jamilu. Okay, so after gold, we'll take a quick look at dollar franc. Okay, so let's see see retracement Fibonacci. Can we do any Fibonacci retracements like this? Price, as you can see, okay, it doesn't really capture it very cleanly, but I think it could still serve as a pretty decent area to points to do the Fibonacci retracement from this swing low on 28th of Feb to the swing high on 4th of May. Okay, so naturally once the levels of 33 and 38 are broken, they are not valid, so we're gonna just keep oops, wait, let me move this here. Okay, so we'll just keep 50 for now because that's most relevant, and probably 61. Okay, if you keep 50 and 61, so you can see that yeah, price has stayed above this zone at 1940 and 1950. This is our support zone. And then for the second support, it is just under, or not, it is not just under, but it is below the 61.8% Fibonacci retracement. Okay, then okay, let's go into the 4 hour time frame. Okay, let's see if you can identify Fibonacci retracements here. Okay, a lot of deviation in price action here. So prices, yeah, the trend line doesn't capture the price action very well. So this part, don't I don't really quite like this. Maybe if there's anything closer here. Again, there's a lot of deviations around away from the trend line. The trend line is not capturing the price action cleanly. Probably, maybe this would be a bit better. Okay, so let's just use this on the 4 hour time frame and pull up all the Fibonacci levels. Okay, so price has broken through all the levels, and you could even say that okay, it's found some resistance at 78.6, so perhaps you can just keep 78.6 here, right? So price ran into resistance last week at about 1960 to 1967 before reversing to drop lower. Okay, and also if we look at overlaps, you can see a pretty decent overlap here. So first support is clearly being tested today. Second support is way too far, so let's try and identify a level that's a little bit closer, right? So you can see here this level at 1937.40 acted as resistance on 15th of March, support on 22nd of March, and all the way support again from 25th of May to 14th of June. So this acted as a pretty significant level in the past, although it did break through recently. But I think we can still take note of this level and identify and keep it as a potential key support area as well. So we have the swing low on 15th of June. So I'll probably just highlight this as a pretty strong support zone. Should this first support at 1950 be broken today as well. All right. So okay, do take note of these levels as dollar demand comes into play this week. Well, at least today. So we may see gold prices push down or fall down to the support zone, and then as as the monetary central banks take over and inflation data out of UK starts being released, we may see the dollar being sold off uh, on Tuesday and Wednesday. All right. Okay, so now we'll okay. So there's two requests. Okay, so dollar franc and then Bitcoin as well. Okay, so we'll do dollar franc and Bitcoin. Okay. Right. So this is the daily chart for dollar franc. Right. Okay. So you can see last week the strong demand for the Swiss franc over the last 3 or 4 days. We saw price dropping from 909.90 all the way down to just above 8.89, and it's retracing back up to the first resistance. So this is where it could run into serious pressure, and then we may see dollar franc stall around this level. Okay, and okay, since we're on the daily chart, I also see pretty decent. Okay, don't like this deviation. Yeah, okay, this looks better. You can see the trend line capturing the price action very cleanly, and we can see, okay, so 50 and 60, so I'll just keep 50 and 60. 50 and 61.8, right? So we can see this is a strong resistance zone for dollar franc on this, on where the second resistance is, and on first resistance, let's see if we can identify anything. Let's see, projection, any. Okay, this is a bit too far. So this projection is identifying another support level, but okay, that's just too far. So we don't. Let's not keep that. Right. Okay. Now let's go in onto the 4-hour chart. Any support, overlap support. No, it's not a very clean chart as well. So it's quite hard to find overlap supports as well. But okay, let's see for Fibonacci. This is not the best, but looks pretty decent. Okay. Right. Okay. So 23% has broken through clearly today. So we can expect to see it run into resistance at the first at 0.8989, which also lines up just above the 38.2% Fibonacci retracement. So we'll just keep 38 here. Right. So this is our resistance zone for dollar franc. And on the support side, right, okay, because we don't see any other clean overlaps or clear overlaps. So I think from a support point of view, this level at 0.8910, 0.8910 would be your first immediate support area, basically at the recent swing low. Okay, so do take note that this would be the immediate resistance and support levels for dollar franc. Okay, next would be Bitcoin. Okay, we'll go on to Bitcoin. Okay, once again, start on the daily time frame. Right, you can see a sort of ascending triangle pattern on the for Bitcoin on a daily time frame. So we have identified various support. Okay, probably this now. It's already broken, so I don't think. Could we still use this? Let me see. Okay, on this upward leg of the move, okay, again, probably you can use, yeah, we got a 50% and 61.8% Fibonacci retracement levels. This one, okay, wait, let me see. This move, although it's already broken it, okay, but never mind. Let's just remove it for now. Let's just see this move here captures it quite well. Okay, let's just go into the 4-hour time frame to see if how it's okay. Right now, when you zoom in on the 4-hour time frame, we can see it a bit more clearly. Right. Okay. So we can see, yeah, this big deviation here. So probably, if I want to do a Fibonacci retracement, I'll probably use this part of the move. This is pretty clean. Okay, so that means we can see price running into resistance at the 78.6% Fibonacci retracement. So we just keep 78.6. So as an immediate, because the first resistance is a bit too far. So for the 4-hour time frame, I would use the 78.6% because we also see a decent overlap here on 17th of June, 8th of June, and over here on 1st of June as well, all the way till about here. I guess, yeah, I would stretch it just till here as the first resistance area on for the 4-hour chart. And then for the immediate support, okay, the current support zone is not too far, so I think that's fine. So I'm going to adjust this first support zone. So the support zone between 25,400 and 25,800 will be the first support zone. But let's just see if there's any Fibonacci retracement levels that line up with these overlaps. Right, so we can see the 50 lining up quite well with this zone, and also 61.8. So let's just keep 50 and 61.8%. Right, okay, so these are the current levels for uh, Bitcoin, right? Okay, so we've had all the recent news about the SEC going after Binance, so that's why we've seen crypto pullback in general quite strongly over the last 1 week or so. And then we've had a big I guess recovery in price, or not big, but we've seen a bounce up, a retracement level up, but general downtrend for the crypto space is still still in a downtrend. As you can see, price is kept in this ascending triangle. We may see Bitcoin push higher, but do take note that we have an area, a resistance area, that's capped by this overlap resistance at 26,810 plus this descending trend line as well. So this zone at about 26,800 is a key resistance area for Bitcoin. So we may see prices being kept around here before resuming the downtrend, especially if the SEC continues to go after Binance hard and does come up with some serious claims against them, right? Or they file some serious charges against Binance. Okay, so let's see, was there anything else? Okay, I think we'll just quickly end off with oil. Let's just take a quick look at where oil is. Again, fundamentals for oil are not that great given the weakening outlook coming out of China and the rest of the world as well. Economic demand or activity seems to be uh, slowing down or getting slower, and especially with China not reopening in a manner that many were expecting, the demand for crude has is not materialized from China's standpoint of view. So in the recent data as well, trade balance data, they've actually been importing less crude oils, and their imports and exports have both dropped, which signals weakening domestic and, of course, international demand. So that's not good when the second largest economy in the world is not reopening as strongly as expected. So hence we've seen crude oil prices pressurized despite all the production cuts. Okay, so in terms of a support level, it's probably a bit closer. You can see that this level here at 67.50 or 67.47. Uh, this would be a level that I would identify as a support area, strong support area for the 4-hour time frame. So I'll just zoom into the 4-hour time frame soon. But you can see probably no changes to the first resistance. We see a very nice overlap here. We can also do a Fibonacci retracement on this leg of the move, right? So we can see 50% the overlap resistance lines up pretty well with the 50% retracement level as well. And then in terms of second resistance, we can also see a nice overlap here, which also lines up quite well with the 61.8% Fibonacci retracement. So on for the 4-hour time frame, I would probably identify these levels as something closer in terms of with regards to support and resistance. So let's quickly switch into the 4-hour chart. Right, okay. So we can see we have our zone here, resistance zone. And then should price break through this level, which is quite unlikely given the outlook for oil, although we can't rule out any production cuts, surprise production cuts, which could temporarily push crude prices higher. So the next resistance area would probably be around $76.90 per barrel. And in terms of support, the closest support level would be at 67.50. And then we have the next big support zone down at between $62 and $64.60. All right. So, okay. So we've come to the end of today's session. Yeah. So I hope this has been a good uh, experience for you guys. Okay. So just to round up, just to quickly summarize. Yeah, we can see dollar strength coming into play today, and we've identified the major resistance levels uh, on the daily chart as well as the 4-hour chart. So you can use these levels for like longer trades, like swing trades or positional trades. And you also have resistance levels for the 4-hour on the 4-hour time frame, where you are able to identify intraday positions as well. All right, just to end off, do take note of the economic calendar for this week. Yeah, we have two major central banks coming up, uh, the Swiss National Bank and the Bank of England. Plus, we have inflation data out of the UK as well. And of course, we have Fed Chairman Jerome Powell taking the stage as well on his 2-day testimony, which will definitely be uh, very will create major impacts on currencies and the price of gold as well. All right, thank you everyone. Have a great trading week, and I'll catch you guys at the next session. All right, thank you everyone for your kind words. I really appreciate it. Yeah, and best of luck. And yeah, have a good week, and I'll catch you guys soon. Thank you.